How high can Near Protocol go in 2025? There's lots of speculation all over various different social media platforms, whether that's YouTube, whether that's X, whether that's Facebook, etc. Well, today I'm going to take some time and share my 2025 price prediction for Near using a couple of tools that I've leaned on quite heavily in the previous bullish markets and bearish markets that have been incredibly accurate. As I get into today's video, if you do find it useful and informative, smash that like button. If you are new to the channel, subscribe. And let's go ahead and take a look at what's going on with Near. Okay, guys, we're going to kick things off right here. This is a Near Protocol paired up with USDT. We're on the one-day Binance chart. Now, what we're going to do is we're going to use a couple of tools to help us understand where we currently are based on where we have been and whether or not history is likely to repeat itself. The tools that we're going to use for this are Fibonacci retracement and extension tools. This is a tool that is embedded in TradingView. You just draw it on. There's a couple of caveats to that that's important to note. One, if you are using your charts on logarithmic like I am, if I do not, it looks like this. And when I turn it on logarithmic, it looks like this. When I do that, it's important that I also come into the Fibonacci retracement styles tab, scroll all the way down and use the Fibonacci retracement tool in a logarithmic style, okay, or scale. As you can kind of see, it changes depending on whether this button is ticked. So if my chart is in logarithmic, my Fibonacci tool has to be in logarithmic too. So that's the first thing I wanted to point out, and the first tool that we're going to use today in this video. The other thing that we're going to do is we're going to use Elliott Wave. Now, Elliott Wave is an insanely accurate tool. Price action analysis concept, I guess, is probably a better way of articulating it. But it's very, very complicated. Okay, it's complicated because it's basically psychology. It tracks the behavior of people, right? The buyers and the sellers. How they are behaving determines their outcome. Okay, so it's important that we understand that Elliott Wave theory, or Elliott Wave, depending on how you want to articulate it or know it as, it is very accurate if you get it right. If you get it wrong, it looks like you just don't know what you're doing and you're just not drawing it correctly, right? Now, it's very difficult to understand all of the rules and to remember all the rules and all the intricacies of Elliott Wave. It's even harder to implement it. So if you find that Elliott Wave isn't working for you, the problem isn't necessarily Elliott Wave, it's actually the analyst drawing it, not drawing it correctly. I put together a whole course on Elliott Wave. Down in the description, you'll find a link over to Cheeky School. You can check it out if you're interested in it. It's very complicated and it's quite difficult to do, but when you get it, it's a beautiful thing. It just works. Back test it 100%, it will always fit, right? So Elliott Wave never fails, only the analyst fails. I don't get it right 100% of the time either. No one does. Obviously, it's tracking the behavior and the psychology of buyers and sellers. It's quite a difficult subject, but I'm going to be using it in today's video, and I'm going to be using it with the Fibonacci because the two things go together hand in hand. Okay, so knowing that we've got the foundation set, right? We're on a daily chart that's Binance. It's Near paired up with USDT. We're going to use Elliott Wave and we're going to use Fibonacci tools. We can be predictive over what we expect the outcomes to be, in the same way that we did have really good output on where we thought the bear market was going to be. A lot of people were calling June 2022 the bear market low point. We said categorically that wasn't, and that was because of Elliott Wave. Elliott Wave was telling us, no, we should expect more to the downside. Did we know what was going to cause it? No. Was it going to be the November lows? Not necessarily, right? In Bitcoin's case, it was, but it wasn't for altcoins. Altcoins bottomed out in October of 2023. Okay, so we can't time the market, but what we can do is we can be predictive over where the market is likely to go based on how people are behaving. So for us to understand the 2025 potential for Near, we need to understand what happened in 2020 and 2021. Okay, here we can see a really nice run from the lows of 2020 up to the peak that actually was in January of 2022. Here for Near, right? You can see it right up here. This is actually a little bit later than some of the other projects. A lot of projects kind of peaked out in November of 2021. Here for Near, it was the 14th of January 2022. Okay, here we can see a really interesting kind of structure breakdown as we bottomed out in October of 2023. But before we get into that, let's talk about what happened in 2020 from its low point all the way down here on 4th of November 2020, which is the earliest data point that we have. It's not the March 2020 low. This is just what we have available to us today. Okay, so from here we can see a really interesting kind of structure, and this move to the upside, measuring it with the Fibonacci tool, moving this tool over to our swing low of July 2021, we can see that we just fell short of the typical range. The typical range would have been between 1 and 1.236 on the fib scale based on an ABC structure, a zigzag A, B, and C structure. Okay, so we would have been targeting out $22.14.5 to $41.42.0. Minimum expectations, though, are at a double top at the A wave, right? So we would have met minimum expectations, we exceeded it, we pushed up. And the internal structures here would also allow us to then measure out where we think that next kind of ending structure is likely to be. Okay, so as we kind of called off and we have this move and rejection, we could see that the top was in for the bullish market and we did fall short of our actual expected ranges ever so slightly. This is the importance of understanding where the psychology sits and fits in with everything. Okay, from here we can see we've had a bearish breakdown in the bear market, and of course this particular structure is also quite interesting. It is, in my opinion, a WX and Y structure. Okay, the WXY structure is a double zigzag pattern, and you can see we have here like so, and it took quite a bit of time to play on out. That means that we're in the next big run to the upside. We started to consolidate down already, which is quite nice to see. As you can see, lots of overlapping candlesticks in this nature of lower lows and lower highs. This actually is a bullish setup. Although it feels bearish at the moment, this is the opportunity to be taken advantage of. So from our lows of the October 2023 to the upside that we had in March of 2024, we've been calling off quite nicely. There's also pockets of support and stuff in here, but I'm not going to go into that too much detail. My main point is that we have a strong bear market low point that's not likely to get breached anytime soon, and so that is going to be our anchor point for the next kind of bullish market highs, right? It's still kind of where we think things are going to go, because there's a high probability here that we do have ourselves a large WXY structure for near protocol. That means a W up here into the 2021 high. The 2023 low is our X wave, and we're going to be looking for that Y wave high. Now, taking a look at everything that's going on at the moment, we can see here a nice breakdown. This breakdown to me looks like we should be expecting a little bit more volatility, but we're getting close to kind of finishing things off. And then from here, we are going to be seeing another run to the upside. So let's go ahead and zoom out for a macro view. And first of all, kind of give our expectations as to kind of where we think that next kind of run is going to be. So our swing low of October 2023 is at 98.2 cents. So I can go ahead and put this down at 98.2. Okay, and by doing so, we're going to be able to kind of predict out where we think that macro structure is likely to go. Okay, so I'm going to go ahead and put that at 82, there we go, or 98.2 I should say. And then from here we can see that our Y wave structure could have the potential to move up between 38.558, okay, and 91.681, okay, right up here. Essentially, this is the 1 to the 1.236 and would typically be where you would expect things to go. However, there is another scenario unfolding for near, which could see things maybe move up a little bit more aggressively. Based on our current swing low, which I do think is August the 5th, I'm going to go ahead and zoom in right in on that low right there, as you can kind of see, August the 5th. This low was coming in at $3.07.6. Okay, so $3.07.6. I'm going to go ahead and try and move that Fibonacci chart right there. This one shows the potential for us to actually see, actually a little bit lower. I thought it would be higher, but it's a little bit lower, so it is what it is. Coming in here at 2792.5 to 46996. Okay, I'm going to go ahead and remove the Fibonacci charts off there so you can see that one a little bit clearer, and you can see it right inside there. So there's a little overlap between these two, but this is probably the area of expectation to have. That means, yes, there's a new all-time high, but is it going to be, phenomenal in terms of gains? Well, from our October lows up to the low side of that $25 range, $27 range, sorry, I should say, it's about 2,700%. To the higher range, around $46 or so, we'll be talking about 47,000%. If we're able to rally up to $91, that is going to be around 9,200%. So there's definitely some potential there for us to see some pretty lucrative gains, more than maybe others. Some have seen some price predictions that I've done recently where we're seeing maybe just 2,000% gains, that kind of effect. This one does look like from October lows, we could see some potential gains. If you're late coming in and you're to take today's price, then we are really only talking about 469% to about 869% on the kind of low expectations, or potential rally up to about 1,800%. So there's still some lucrative gains to be made in there, whether it turns out to be, nearly 100x, or whether it turns out to be just an 18x or something to that effect, or maybe even lower than that, we'll see a 6x. Ultimately, NEAR does have some potential for some pretty lucrative gains. It does, to me, look like we have the possibility for a new all-time high. So that's all good for me in terms of my opinion as to where I think we are likely to see NEAR going in the near future. So a new all-time high, some pretty decent amount of gains, maybe not the life-changing money that maybe some people are kind of communicating or speculating about. These things are definitely possible, but based on the kind of psychology of who's buying and who's selling, I see this thing really kind of kicking in and really kind of only seeing gains in and around that kind of $27 to about $91 for NEAR, in my humble opinion. Now, this is just my thoughts and opinions on the data in the charts as I see it. What do you think? Let me know in the comments down below, or join us in our free Discord server. I'd love to get your thoughts and opinions as to where you think NEAR could potentially be going in 2025. If you found this helpful, smash the like button. If you are new to the channel, subscribe. If you haven't done so already, check this video out right here. It's not one you're going to want to miss.